We had some decent moves today, and we retested that level that we've been talking about for some time. Let's zoom in on it. We definitely need to go through PCE because I think that's really the overhang. If we take a look at our level here, which is that going to be that 330 level on Wednesday, we obviously all know what that is, but we didn't really get down all the way there. We tried to get there, but we just weren't able to get there today. Obviously, that's the XFOMC date. And that was when he got done speaking and we rallied. You can just see the double tap and the undercut. So I think that that's a good thing that we did that double tap and then we did that undercut. The real question is what happens now? And I truly don't have the answer yet, but I think the answer is going to lie really in PCE and getting into the data. We're going to have to really watch this data tomorrow. There's a couple key things here that really stood out to me. Specifically, what got me was what we saw happen with the breadth of the market and how that's been continuing. If we go through our chart that we went through this morning when we do the public video at 8:30, it was very clear what we were looking for. We had this trend line. We talked about how we broke this trend line on Tuesday, the retest, the rallies. And then when we just kind of drilled into this on the econ data, we could see what we were setting up for. Go to the 4-hour and drop in an RSI. And if you just take a look at it, this is exactly what we were talking about and really what we wanted to see. So we have the negative divergence, and we've been yammering on about that since right around the Fed. And from that, you could see it start to, that overbought area. And then we start kicking it in here on a Tuesday a week later. And we can see that that's starting to become a little bit of an issue, right? So once we have that set up and start seeing that issue, we know that we have to just be on our lookout because these have really been pretty fortuitous. I mean, you can see very clearly how they've just been denoting what's about to happen. And the steeper they are, the deeper they drop. And this one's gotten a little goofy. So there's definitely something to it. But most importantly about it, and what I think is most important about it, is now we're in the oversold. And this is where people will start saying, oh, I need to get back in. Well, you can stay over here for a little bit. Sometimes the double taps, in my opinion, are the best. That's where I would focus and then kind of go from there. But there's some signs here that even if we bounce, I'm not so sure that it's just going to be all that rosy. Even when we're doing these undercuts on the hourly, it's not great. And so let's start with the basics. And then I think we have to spend some time on PCE. And then there was just some monster moves today. And that's the great thing about drops. It shows you, everybody scatters and they go after the names they really want to own. But let's get into it. Now in front of us is just the NDFI. And then I just put the NDX up top. And we can see how this is going. And eventually this becomes an issue. And I just want to just point it out. You can just see us dropping here on the breadth of the NASDAQ 100. And we've been doing it since June. And we're just defying pretty much everything out of that NDX 100. And then we can just see that we've just been lifting. After a while, specifically with this level right here, once we start breaking 50, that's usually when we see some issues. Now, let me click on it from this standpoint. I like doing these while I'm fixing them and leaving it on because I get asked a lot of questions about TradingView and I just think it's easier and people can learn to do it for themselves. But what I did was just change that to the percentage. So you've been staying above that 50 for some time as this started to crack. But once you start breaking 50, that's really where you start seeing the pain, meaning, yeah, you can start being out of balance. But once that 50 line's broken, that's pretty much it. So well, that's usually where you run into issues. So if I just drop this down for a sec, and we'll just forget about that magnet, and I'll come straight across here for 1 second and just drop it perfectly. And you can see us battling it, but now we're starting to hit that area, and what's happening? We're rejecting that area, aren't we? So I think that this is really the problem. And again, all you have to do is just go look at the 50s. And it doesn't even matter if you're down already. That's really where the metal starts meeting the road as far as when you're going to start having a problem. And you can see you never really got any higher than there. And you usually don't when that breaks. It doesn't matter where we mark them off, but you'll see them. It doesn't have to be this huge meltdown, but just it's the same thing when you pop over them. They are defining levels. But if you look at when you broke here, by the time that you actually lifted over, this took months. So this is definitely on my radar as an issue for me and seeing this. And we're seeing it a little bit in the S&P as well, but not as much. The real issue for me is McClellan summation. And I went over this yesterday and I'll be monitoring this a lot, but every day it's getting worse. It's not getting better. It's not turning over. And what this determines for us is just the breadth of the market, but it actually measures the McClellan oscillator, which gives us a longer term outlook. And every day I'm going to keep watching this thing now until it starts. I look at it anyway, but I really have to pay attention to it now because it's constantly getting worse. And what we're seeing is we're seeing some what I would refer to as just outright apathy in regards to the market. And I'll show you what I mean by this, where we're dropping. And then when we drop, people are just like, oh, I'm just going to buy the dip. Well, eventually, when you're up this high and the breath starts going away, I'm going to use the NDX as an example here, you have a really bad day. And what we're still seeing is we're still seeing those dip buyers out there. And I'm not saying crash, we're going to crash, none of that nonsense, but the idea that you're going into the end of the quarter, you're facing PCE, and that you don't think pension funds and institutions can rebalance, I think it's an issue. And we have been getting our line in the sand, I guess is the best way to say it, from Bitcoin. Bitcoin's really been that barometer. If we follow that, we've been okay. You've had the cup and handle. We broke out of the cup and handle. We've failed, attempted, pulls back, fails again, rejected, holds the line. And now we've got this silly little head and shoulders here with this trout-like shoulder. And it looks to me like we're going to break. Now, if we start breaking down through these levels, that's going to be more pain for the index, because this is really not done anything but a risk-on trade at this point. We'll clean all that off. And then you can just start seeing this. But here's what's really interesting about this and what I want to show you. If we get rid of the 22 for a second here, and then we get rid of the 12, and I just look at the 55, well, I haven't had a declining 55. I now have a declining 55. So meaning when we're breaking it, I wasn't declining. Well, now it's declining and I'm sloping down. This is the exact opposite of what we really want to see. And I can't stress that enough. So this is the risk on side of it. The other side that could really cause some kind of panic here is, it was really interesting because I was talking to someone about this. We used to trade these names because of earnings and revenues and everything else. Now it's just inflows of capital or outflows of capital, right? That's the whole reason for these things moving. Well, if everybody can sell their worthless stock to retail and then go buy an asset, why aren't they going to do that? And this is where I think it's going to get really interesting, because one of these is going to blow up. One of these treasuries is going to blow up. It's just a matter of time. They're going to overextend. They're going to buy it. They're going to buy a synthetic. They're going to have to unwind it. And Ethereum is going to get slaughtered from it. And you're already starting to see it. This is really fascinating to me. You're adding more of these treasuries day by day. And, everybody from, Tom Lee, who's talking about his is special, his is different. It's not. To these people saying that, SBET, we're going to make sure it never breaks NAV. It's already broken NAV. So all these things that these people are telling you, they're not accurate, right? But it doesn't really matter. You had another one come out today, and then this one is from China, and they're supposed to be one, and then all of a sudden the stock gets smoked today for some reason. And these all things, I'm going to just, for lack of a better term, they're all scams, guys. Like, they're loading these things up, and then they're putting it on the tape like 2-3 days later, right? It is what it is, but they're taking worthless paper, selling it to retail, and then going and buying it. And what does this have to do with the breadth of the market? A lot, actually. It has a lot to do with it, and I'll explain. When you start to see real risk come in the market, that's when people start getting jumpy. And this stuff is setting up to come in hard. And I'll tell you, the more you're adding here and the more these people are selling stock, the more people are dumping to them. If you look at this and you think about the amount of crypto treasuries that have come out in this market from this time frame over, and where have we gone? Well, we've gone to 5,000, then we never came back there. And so between here and there, I would argue between August on, you've had more people decide to be a crypto treasury than I can even mention, right? So we have complete dilution of this thing because it's not regulated at all. It's not even going up anymore. It's actually going down as they are buying it, because people that have these large positions are just selling to them because they know how this goes. And it's just a matter of time. That could be a trigger for us. And I actually think it's going to be a trigger for the whole crypto market. And when that comes in, I think it's going to be a real problem. Everyone will say, no, I don't understand treasuries. Okay. Tell me about your ape, your NFT ape. How's that going for you? It's the same thing. It's just a matter of time. It's just the next new thing, right? So watch Ethereum, watch Bitcoin, and see how that goes. That's going to be the canary in the coal mine. What tends to work best in these kinds of environments, what I've noticed that works best for me in these kinds of environments, is to go through and look at more of the longer term stuff and the shorter term stuff. And in the middle, the swings, this is where you get eaten up. And I'll explain, but let's go through the PCE first, and then we'll go from there. Now, before we get into the numbers on PCE, I think there's a couple of things that are super important. The difference between PCE and CPI. The clear difference, obviously, is going to be in the shelter. And just to show, just so we're clear, here's CPI up here. And what we're doing is just showing the weighting right here of shelter. That is 32.9%. Over here in PCE, they have it listed as housing. So when you see the data tomorrow, you're going to get healthcare services, and that data is going to overshadow housing. Really important, because if healthcare services was up last time, or financial services and insurance was up, well, these are your weightings more so than shelter and new and used motor vehicles. Now, we know new and used motor vehicles actually came down, and when we go over here, we're not going to have that weighting. So if we really look at what was up last time, a lot of people are raising their estimates on PCE, and we could see a hotter number than expected. And based upon that, that could give us a little bit of a problem tomorrow with the whole continuing rate cut thesis, or at least make people a little concerned. And I do think that is viable tomorrow. You never know how these numbers are going to come out. Truthfully, you just don't. But when you understand the weighting, shelter is a huge weight in the CPI, and it is a weight here, of course, as well. But we definitely are weighted heavier on the healthcare services side than we are here on the shelter side. Now, previously, we came in at 0.3. Consensus is 0.2. Personal income month over month and personal spending are definitely going to be things that we're going to want to watch. But for our purposes, the consensus tomorrow, and I always find this fascinating, PCE index on the month over month, they say it's going to be up, but somehow the core side of it's going to be down. And then the year over year, even though consensus is going to be up, year over year is going to be down. That should be interesting. Core PCE is supposed to be up as well, 2.9. If these come in line, we should be okay. Now, tomorrow you also have the consumer sentiment. We always have to take into account that this is a soft data number, meaning this is just people's feelings and how they feel and the expectations about how things are going to be. It doesn't mean we don't pay attention to it. Just understand that, yes, it does matter. But PCE is what we would call hard data. And this is where it gets important. When we look at PCE tomorrow, the annual change since April, we obviously started coming down February, then March. And these numbers are skewed, obviously, because of the tariffs. But since we started in May, June, and July, we've done nothing but go higher. And this becomes an issue for us, because if we start to see this increase, then they could cut rates less than they're expecting to cut rates. And if we see signs of that tomorrow, then the stagflation argument could be a little more valid. And I think that's one of the key issues that we're starting to see in the marketplace. Now, to start, a lot of these things are starting to come home to roost. And you can see this with the frothiness of OKLO. I understand they're going to reinvent the way energy works. That's fantastic. But right now they have zero in revenues. And whether it's $20, $200, or $2,000, it's only worth what somebody's willing to pay for it, like everything else. And so, if they're willing to pay $150, then they're willing to pay $150. Right now, that's $119. We did get involved in this community down here. I think we paid in the 60s for it. And I actually sold on this reversal. We sold the last piece of it. But on these scales, we're selling on the way up. But we got out actually yesterday. I actually was short overnight and it worked out really well. We actually went over that in the pre-market today, if you watch that. So you have these kinds of names that are coming home to roost. And then you start looking at the IONQs of the world. And then people are going, oh, this is fantastic. We're doing so well. When's their product coming out? Sometimes between next week and never. So, and not just this one, but all of them. You start going through these things and trying to figure out which one's a real company and which one's actually a burrito stand. And, there's somewhere in between these things are going to actually make money. And some of them are not. And I just point that out. Like, this company's doing $3 million a quarter. If you start looking at some of these numbers, it's somewhat staggering. So where does this lead you? It leads you to two things. Number one, buying the leaders is where to go. So IONQ at least has enough revenue quarterly that it doesn't trade like a taco stand, right? You're starting to see them going for the leading names. And that's a really good sign. So if I wanted to be in this space, I would trade the leading names. You're seeing a lot of people buy IBM. They're starting to understand that IBM is actually in the quantum computing space. If you go and take a look at QTUM and start seeing what their top holdings are, I think you'd be a little bit surprised by that when you start to see what they really are versus what people think they are. That'd be a great exercise for you to run through and take a look at that. I would also say that URA today and the bounce after the absolute bloodbath of OKLO today, this is exactly what you're looking for. They came in the market, they stepped in front of the market, and they bought. And we're starting to see LEU actually build out. So while OKLO imploded today, LEU gave us some really good news. They're expanding out, they're hiring. This is what you're looking for. Now, I think it was super aggressive what happened today on the dip. But some of these names, boy, man, did they rip. I mean, they absolutely ripped. People could not get in these names fast enough, and you can see that. And it wasn't just that. So the first thing that I would take away from today is I would run through all my charts and I would look at them and say which names actually on that dip either encompass the previous day, meaning the bullish engulfing you're looking at, or what names did they have to buy. And when you start going through them, it's the KTOSs of the world. It's those kinds of names. And I think that's super important for people to get. That's the kind of stuff that's moving here. And that's the kind of stuff that we want to see move. We want to find the real revenue companies, the real earnings companies. And when we start going through this, this is what we start to get. And that's very important for us to pay attention to. I think it is. I think it's super important for us to pay attention to. So where do we go with this? Well, we run our scans and then we look at that. The other thing that you do in this kind of environment, even with the names that you're interested in, is you set yourself up for success. How do you do that is if there's a name that you're interested in, like for me, I really like Oracle, and I think they have a lot going for them. And I know everyone's out here saying, oh, they're never going to be able to pay the bills. You know, everybody's all of a sudden like a financial wizard. But if we sit here and understand this and what they're saying, you know, these payments for OpenAI don't start until 2027, whatever. They absolutely crushed. It was a great quarter. If the stock drops, the stock drops. But in the meantime, I still want to trade around it. So I just mark off my levels. I know where they are. And then I go from there. So when this gets down to like 290, which is a huge level, like it's an enormous level for this. And so is 295. What I tend to do with it is I want to get involved. But I don't want to get involved without having the parameters that I use. And so like the parameters that I tend to use on these deals is, all right, look for my bounce, look for my setups. And then when I get my setups, I put them on and then I'll scale out of them. And then I'll leave a runner with a full target. So like my target here was really going to be up to that 300 range. But once I start getting up there, you can start seeing it reject. In the meantime, I'm scaling out of enough to leave a portion on so that if it goes, then I have a full position on. I can make enough money, meaning that if it goes up enough and then starts pulling back again, you can start adding to it and going from there. But really what you want while all this is going on, all this minutia is, you want a runner so that you have the flexibility to add and take away. And I did this today with Oracle, and you're seeing Oracle after hours as I'm doing this. But also the other thing that I think is really important here, we also saw this, and we did this a few times today with IREN. IREM was another great example of just having those levels marked off, and then after they're marked off, just taking advantage of those swings. In other words, allowing it to get up to where we know that level of that 50 is, where we've just been fighting it for the past 2 days, and then just get back in on that Wednesday breakout. And it's just allowed us to just really have a lot of flexibility here by getting these and then holding core positions. Specifically, the larger the name, the easier the trade is. The more institutional following, the easier it is. Here, take a look at this with Oracle. I think this will be easier to see when we did it live today. Bought Oracle, low day stop. 290 is an issue here. You're not breaking through it. They're trying to hold, but they're not doing the best job in the world. Right into that. $1.50. You look like you're going to hold here. See if that holds or not. Oracle, I'm just sitting with still. I haven't done much. Not much for me to do. I'm about to be up 3. Where's the opening bar on that? Is that it? So I'm up 3 and I'm going right into the open. Trimmed. There's the open. We're going to trim into the open in case these people have changed their mind. You know, you got to that level and now you're stopping. I pulled money out there. I'm not going past break even on any of this stuff today. If it goes to my break even, that's enough and I'll just get stopped out of it. I put my stops at break even and then I just leave the runners. And my runners will be anywhere from 25 to 33%. And let's say it turns around and Oracle goes to 308 or something. I have a position on. It's not a full position, but I still make money. The goal of days like today for me are just make money and then just get out of the way and preserve capital. 300 is really the target on Oracle. The question becomes, do we really want to wait? Maybe if this breaks down here, I'll just kick it, take my $5 and go home. I've had a great morning. 100% out of the Oracle trade. So hopefully that's helpful. But I think for our standpoint, what do we do tomorrow? And I really think that when you look at the 10-year, you're going to want to take your lead from that. Does the 10-year to continue to sell off? We're watching these names like Rocket, and they're continuing to sell down. Not exactly telling us that we're going to have all these rate cuts. As a matter of fact, they're telling you the exact opposite. The other thing I thought was so fascinating is they tried to sell gold down the other day, and they're just not able to, and it's already setting up to rally again. I'd watch gold tomorrow as well. The other thing that I really want to stress here is there are no sacred cows. In other words, If you take a look at the market, last night people were getting out of Tesla at 448 and they're talking, this is it, man. This is the time. It's going to go. And if you just start looking at stuff and you're just super objective about it and going, well, every time we're getting up on this 94 up here on the 5 minute, we start running into an issue and here we are again, 7:30 at night. Boom, and it's hitting that level and everybody's getting giddy. And you come in today and now you're down and it's at 419 and then you look at it, it's at 16 and everyone's puking it out and then it bounces again. Like there are patterns and rhythms to this. And of course they could break and then always go lower and they're the divergences that you're looking for. But this idea right now of holding something, that in and of itself, I think is where the issue is really going to come in. If you're going long term, I think you're fine. If you're going short term, I think you're fine. What is working optimally for me is having a position and a name that I really like. So this IREM, we've been in since the 20s. But if I have a core position and I'm having a trading position around that, the volatility is easier to handle because mentally I want it to go down so I can buy more and then trade that trading position up. I can get more into this on Saturday if you guys want. Just comment below. That is it. Have a good night, everybody.